Hi everyone, welcome to today's charity governance webinar. My name is Louise. I'm joined today by Alison Brennan, who is partner at DTM Legal. We're going to start with a bit of housekeeping. So if you are unable to hear anything via your computer, you can log in via telephone. The details are now on the screen. I'm going to apologise in advance if there are any technology issues. I think I can speak for both myself and Alison when I say that we are not technical experts. And we have already had a slight teething issue in that Alison's camera isn't working. So unfortunately, Alison is going to be on voice only today. Please feel free to ask any questions throughout the webinar. There is a chat function on the right-hand side. We probably won't answer the questions as we go through the webinar, but there will be an opportunity at the end, all things being well, to answer some of your questions live. If we don't get a chance to, we will take them away and the most appropriate person will be in touch with a detailed answer. The webinar is being recorded and it will go live on both the Mitchell Charlesworth and DTM Legal websites probably early next week. So if there are any technical issues or you do have to leave, it will be available on demand. I'm going to pass over to Alison now, who is going to start today's webinar. And I'm going to switch off my camera and pass over to Alison. Thank you.
Thanks, Louise. Again, apologies that you can't see me. We have been trying to sort out the webcam issue, but have been unsuccessful in that. I'm Alison Brennan. I'm a partner in DTM's Legal's corporate team and head of the firm's charities team. DTM has offices in Chester and Liverpool and provides expert commercial legal advice over a range of areas, including corporate commercial, dispute resolution, property, employment, trusts and estates, and family and matrimonial. So my section of the webinar today is going to talk a bit about the legal responsibilities of the trustees, charity trustees of charities, and what that means for those who are charity trustees. I'm going to start by going right back to basics in what is a charity. So a charity, it's a very commonly used word. It doesn't actually imply a particular form or structure. It's actually defined as a status that is conferred on a group of individuals or an organisation because of the activities that organisation carries out. So charitable status is completely separate from the legal structure of the organisation, and there are a number of different structures which I will review as part of my section of this webinar. Charitable status is a matter of both fact and law, and so with the exception of a charitable incorporated organisation, which is a particular type of structure, an organisation does not have to be registered with the Charity Commission or recognised by Revenue and Customs in order to be a charity. It is a charity if it fulfils the legal requirements for charitable status. So registration is not even possible for all charities. There are a large number of charities that aren't registered because they either fall below the threshold for registration because they have a small income and they're a small charity, or that they are exempt or excepted from registration. That said, the Charity Commission still has regulatory jurisdiction over any funds that are raised for a charitable purpose, regardless of whether or not those funds are actually raised by a charity. And so people who are involved in fundraising need to be aware of their duties as charity trustees. The legal requirements for a charity to be defined as a charity and have charitable status are, firstly and most importantly, that it must be exclusively for charitable purposes. So an organisation can't have a charitable purpose as one of its purposes and some other purposes. And the Charity Commission are very strict in looking at this. When you apply for registration, they will decline to register any organisation that has a governing document that doesn't make it absolutely crystal clear that it is exclusively charitable in its purposes. And this is a stumbling block lots of charities fall at when trying to get registration, because they've not fallen within what are quite narrow purposes. It's also got to be for the benefit of the public. An organisation must be able to demonstrate that it has charitable purposes and that these are for the public benefit in order to be a charity. And the duty of the charity trustees are to ensure that all assets of that charity are applied for these objects for the public benefit. Slightly confusingly, public benefit isn't actually a defined legal term, so it is in the discretion of the Charity Commission when looking at a charity is to decide whether or not the purpose that's specified is for the public benefit. The third factor is that it's subject to the control of the High Court, which exercises jurisdiction over charities. So in addition to fulfilling those three key legal requirements, a charity has a number of features that are unique to charities. The first, which was kind of referred to above, is that all assets must be applied for the charitable purposes. And this is an area that charities can trip up on, because you have to specify what your charitable purposes are. That's usually in the governing documents. And if charity trustees use assets for a purpose that's not the charitable purposes specified by the charity, then they're in breach of their duties, even if they are applying those assets for a different charitable purpose. So it is very important that as trustees, you understand what your charitable purposes are, and that you keep those under review, and if necessary, update them as and when circumstances change, because otherwise you're potentially in breach of your duties and may be personally liable and called to account. It's also the case that once assets have been dedicated to a particular purpose, they generally can't be changed. They must always be applied for that purpose, unless a change is made to the charitable purpose through formal means. Again, any profit must be applied for the charitable purposes. So they must be reinvested in the charity and continued for the purposes that are specified. All charities have charity trustees, and that is defined legally as the persons having general control and management of the administration of the charity. And I'll come on to a bit more detail about what that is and what that means later. Charity trustees can only receive financial benefits in limited circumstances. So charities are quite different to other types of organisation in that most charity trustees are unpaid volunteers, and it's relatively rare for paid employees to sit on the board of trustees of charity. This is because if a charity trustee receives an unauthorised financial benefit, or any individual or business connected to them, then that is a breach of the charity trustee's duties and may result in personal liability. Again, the Commission regulates this pretty rigorously. And in addition, if your charity is a company, then the directors of that company have an additional responsibility under the Companies Act, that they must not accept a benefit from a third party, or that results from them being a director, or they're doing something as a director of a registered charity. And then the final key feature is that a charity cannot exist for political purposes. So this would be something along the lines of furthering the interests of any political party, securing or opposing a change in law or in government policy. This does not mean that charities cannot campaign. Obviously, charities do campaign and undertake political activities, but that must not be their purpose. That is not a political purpose, is not a charitable purpose, and so they can only do it insofar as it is in furtherance of their charitable purposes. So obviously there are a lot of restrictions that apply to charities. So what's the advantage of charitable status? I mean, I think these are well known to most people. There are tax reliefs available. There are incentives such as gift aid that allow individuals, businesses to make gifts and invest in charities. Charities have greater public recognition and can apply for grants and generally find it easier to fundraise than non-charities, because people understand that a charity on the whole is not for the profit of those who are running it. So I mentioned that legal structure is entirely separate to charitable status. There are 4 different legal structures that are the most commonly used in this country, and that is trusts, unincorporated associations, charitable companies, and then charitable incorporated organisations. There are some other forms which often apply to older societies or things that have been established a lot longer, such as community benefit societies and charitable corporations, such as the National Trust, Alder Universities. But on the whole, most charities fall into one of the 4 structures above, which I'll now go through. Charitable trusts are often created by a deed or declaration of trust, which will appoint the trustees, specify what the initial gift or asset is, and how that is to be applied and who the beneficiaries are. Trusts can also be created by will. The governing document is the deed or declaration of trust. It is possible, if it's a particularly old deed or declaration of trust that needs changing and there's no means within that to change it, it is possible to apply to the Charity Commission for changes. Trusts are unincorporated, they have no separate legal personality and cannot own assets or enter into contracts in the name of the trust. All assets will be held by trustees in trust for the trust and the beneficiaries of the trust, and all contracts will be entered into by trustees, again, for the trust. This means that the trustees under a deed or declaration of trust have personal liability and will be liable personally for contracts they enter into and the debts and liabilities of the trust. Trusts don't have members beyond the trustees and are regulated by the Charity Commission, but not by Companies House or other regulators. The second form, which is commonly used by sports clubs and associations and smaller societies, is an unincorporated association. So this is a group of individuals who consist of the members who have come together to pursue a common purpose. They can be formed without anything in writing, which can be quite risky, because something in writing, the constitution, the rules, acts as a contract between the members. And if there isn't anything in writing, then it's potentially quite difficult to establish what that constitution is, what the rules are. Again, unincorporated associations, by virtue of their name, they are unincorporated. They have no separate legal personality. And again, the members who enter into contracts or own assets have personal liability for those contracts and for the debts and liabilities of the organisation. So this is a particular risk where you've got a society that may have quite a number of members and is operated by committee. It's important for the people on that committee to understand that they do have personal legal liability. Charity trustees in a non-incorporated association are the members who actually carry out the day-to-day management, regardless of the fact they may not well be known as trustees, and whatever title is given to them, they will be the charity trustees subject to the regulation of the Charity Commission. Charitable companies, a bit more of a familiar structure, generally limited by guarantee as opposed to shares, although you can have companies limited. There's nothing to stop a company being limited by shares. It's just not very common. Often it's the trading non-charitable company that's limited by shares, that's set up as a subsidiary. Companies must have a written constitution, that's their articles of association. They are filed at Companies House on incorporation, can be changed by resolution of the members, although for charities they also need to be approved by the Charity Commission. They do have separate legal personality, so a charitable company can own assets and enter into contracts in its own name, which provides a degree of protection to its directors, who are the charity trustees. Charitable companies must also have at least one member. Members can be the same as directors, although some charities like to separate out those roles. Members' liability is limited by the amount they guarantee in the articles, which is generally a nominal amount, £1, £10. Charitable companies are regulated by the Charity Commission, as all charities are, but they are also regulated by and subject to all the Companies House regulations and rules. And then the fourth structure is the first legal structure that was created specifically for charities, and that's a charitable incorporated organisation. These are formed not via Companies House, formed by application to the Charity Commission. They have to have a written constitution, much as a charitable company does, but it must be in one of the forms specified by the Charity Commission. Charitable incorporated organisations do have separate legal personality, can own assets and enter into contracts in their own name. Their charity trustees are akin to directors in a limited company, but are called charity trustees. And again, as a company, must have at least one member who can be also a charity trustee, and that member's liability is limited, again, as a company. CIOs are regulated just by the Charity Commission, so they're not subject to Companies House requirements, although they have a form that's fairly similar to a limited company. Talked quite a bit about charity trustees and who they are, and that's the kind of key focus of this webinar. Is a charity trustee is someone who has general control and management of the administration of a charity. So in a charitable trust, they are generally called trustees. In a charitable company, they're the directors. In a CIO, they're called charity trustees. And in a fundraising appeal that's for charitable purposes, it will be the individuals who are responsible for those funds. Governing documents, as I said, use a variety of terms. It doesn't matter what the governing document said, and it doesn't matter if the governing document or document that forms the charity doesn't refer to the people who are managing it as charity trustees. They are charity trustees, and they will be subject to the rules of charity trustees in the law. Some unincorporated charities do actually split the functions, so they have charity trustees who have assets vested in their name but don't actually manage the trust, and then they have charity trustees who are responsible for the day-to-day management, and this is to enable them to not have to transfer property every time there's a change in those with day-to-day management. In this case, those holding property wouldn't fall within the definition of charity trustees. So if you're a charity trustee, then you occupy a fiduciary position, and that demands a very high standard of conduct. It's beyond simple honesty and good faith. You've got ultimate responsibility for directing the affairs of the charity and ensuring that it is solvent, well run and delivering charitable outcomes for the benefit of the public for which it has been set up. Anyone who is taking on the role as a charity trustee should be someone who has the skills, knowledge and experience necessary to make sure that they can comply with this. It is also important that they understand what the charity is set up for, what its aims and objectives are, what its governing document says. A charity trustee's duties derive from a combination of fiduciary nature of charity trusteeship, legal and regulatory framework, and general legal obligations. So duties that are applicable to all charity trustees, regardless of the actual setup of the charity they are involved with. Their guiding principle, the most important thing, is that they are there to promote charitable purposes. A duty that is codified for charitable companies and CIOs as well, that they have a separate duty to promote the success of the organisation. A charity trustee who allows a charity's assets to be applied for a purpose other than the specific purpose the charity has been set up for acts in breach of this duty and may be personally liable. The second, which I've mentioned previously, is the duty to operate for the benefit of the public. And this means having a view to the Charity Commission's guidance on public benefit, and registered charities need to report on this in their annual reports. The third is a duty of undivided loyalty. This covers a couple of rules. There's a no conflict rule, which means a charity trustee has a duty not to place themselves in a position where they may have an interest that conflicts with their duty as a charity trustee. And then the second rule is the no profit rule, which is a charity trustee must not make a profit from their position as a charity trustee. These rules are separate but linked together and effectively add to the duty to act in the best interests of the charity. And that's the next one. The next one is to act in the best interest of the charity and its beneficiaries. This can be anything from safeguarding beneficiaries, protecting assets, including goodwill and reputation, and it's a very wide and serious duty. Trustees have a duty to act in good faith with genuine, honest, intentional motives. A charity trustee acts in bad faith if they act in a way which they do not honestly believe is in the interests of the charity. They also have a duty to act within their powers. And these are derived from the charity's governing documents and its objects, and together with any law that applies to the structure of the charity. The next duty is the duty to act with prudence, and this is an equitable duty of care and requires a fiduciary to carry out duties according to the standards of an ordinary prudent business person. For charity trustees, this means that they should ensure that the charity property is used appropriately, prudently, lawfully and in accordance with the promotion of the charity's specific charitable purposes. And then finally, all charity trustees are collectively responsible for the decisions that have been made by them. So as a board of trustees, even if you are absent from a board meeting, you are still responsible for decisions taken at that board meeting. And so it's very important to take an active role in decision making and to ensure that you are aware of decisions being made by your fellow charity trustees. But then a number of duties in relation to registration, which if your charity is eligible for registration, you have a duty to register it. You have a duty to keep details up to date with the Charity Commission. There are duties to file an annual return for larger charities and to prepare annual reports and accounts. Then there are specific duties which arise from the nature and the legal structure of the charity. The charitable trusts and unincorporated associations, these are lesser than for the incorporated forms of charity, but include a statutory duty of care, which is essentially a duty to exercise reasonable skill and care in the circumstances, and this is expanded. So if you are acting as a trustee in the course of business or profession, then any special knowledge or experience that it would be reasonable for them to expect that you have acting in the course of your business or profession also applies in the statutory duty of care. If, as a trustee, you feel your charity can no longer carry out the purposes that it was formed for, and there's no ability to change its governing document, then there is a duty to apply to the Charity Commission to try and change that and update that. Charitable companies have a number of additional duties which arise under the Companies Act, so duties that apply to directors of any company, duties to use independent judgment, there's financial reporting requirements in addition to those for the Charity Commission to Companies House, there's disclosure requirements and duties to keep records and personal liabilities that can apply if the company gets into financial difficulty. A CIO also has a few additional duties set out by regulation, which are similar to those put on trustees and directors, just codified by the Charity Commission. But again, it's exercising skill and care, not benefiting personally from the relationship. And these are recurring themes that are really important and fundamental to charity trustees. So I've mentioned in a few places that a charity trustee can have personal liability. Obviously, for charitable trusts and unincorporated associations, there is a higher degree of personal liability because you are holding assets and entering into contracts on a personal basis. However, directors of charitable companies, charity trustees of CIO can still be held personally liable for their acts and omissions as directors and charity trustees under Companies House legislation or under the Charity Commission regulation. So charity trustees of any charity, regardless of legal structure, and so this will apply to those who are holding funds raised for charitable purposes, can be liable for breaching duties of charity trustees. Things such as allowing assets to be applied for non-charitable purposes or purposes that haven't been specified, receiving unauthorised financial benefits, providing false or misleading information to the Charity Commission or failing to apply information to the Charity Commission, or disobeying an order or direction of the Charity Commission. These can all result in personal liability and in some cases criminal penalties such as fines and imprisonment. So it is really, really important that you understand the role you are taking on and how your charity works and the decisions that are being made by that charity. One of the key duties that we've talked about is the conflict of interest, and this is key. This is key in general companies, that directors should not get into conflicts of interest. It's even more so in a charity. So a charity trustee must not put themselves in a position where their interests or the interests of someone connected to them conflicts with their duty as a charity trustee. So this can have two angles. It can be a conflict of interest where there's a personal financial interest in a transaction involving the charity, such as where a business in which a charity trustee is involved contracts with the charity. There can also be a conflict of loyalty, where a charity trustee may not get any material financial benefit or even any benefit to them, but is in a position where their loyalty to another organisation conflicts with their loyalty to the trust or the charity. This rule can be breached even if there's a reasonable perception that it exists, and can be breached even where there's no financial benefits. Again, this is another situation that can result in a personal liability and could result in transactions that the charity's been involved with being subject to challenge. Conflicts of interest can, in certain circumstances, be authorised. So charities' governing documents, often articles of association or the constitution of a CIO, can specify certain limited situations where a charity trustee can be conflicted and it can be authorised. The Charity Commission or the court can also authorise a conflict, and certain statutory provisions allow charity trustees to be paid in certain circumstances. Regardless of whether there's something in the governing document to authorise conflicts of interest, it's really important that every charity has a conflicts of interest policy, that this sets out the duties of its charity trustees and what's expected of them, and that it ensures, as far as it can, that any actual or potential conflicts of interest are fully disclosed as soon as they come to light by the conflicted trustee. Where practicable, they are avoided. Here, it's not unreasonable for a charity trustee to resign from their position if there is a conflict. If that's not practicable, then they need to be properly managed, and there needs to be a system for ensuring that the charity is not disadvantaged by the conflict. So finally, to summarise the things I've discussed here, every charity trustee needs to ensure that their charity is run and governed in a good way that is legally and compliant and complies with what the Charity Commission expects. In order to do this, it's really important that you know your charity. Ensure that you are familiar with the legal structure your charity has and what that means for you as a charity trustee. That you have read and questioned and understand its constitution or governing documents. That you know what its charitable purposes are, and that you know that it is able to apply its assets to those. That you know who the charity trustees are and who is responsible for the management of the charity, and that you know how decisions are made. It's really key that you understand your duties and the duties of others within the charity, and that everyone understands their role and position and duties and where potential liability falls. And that you then manage the risk, understand what the risks are, and have a risk management policy. Have a discussion, keep it under review as to how you're going to manage these, and put in place policies and procedures to assist your charity trustees in understanding and complying with their duties. And then monitor and review all of the above on a regular basis. Make it a regular basis, to review, look at all your policies and review them at a regular interval. Review your constitution, review how the charity is run and who the charity trustees are and how they operate, and do all that regularly. And that way you minimise the potential risks and personal liabilities that you face and your fellow charity trustees face. So that concludes my part of the webinar, and I'm now going to hand over to Louise, and I will mute myself and I'll pass over to her.
Thank you, Alison, and hi everyone. I think a lot of people on this webinar probably already know me, but for those that don't, my name is Louise. I am one of the senior managers at Mitchell Charlesworth and also head of audit for the practice, which means I have a heavily weighted towards audit portfolio, but also some non-audit clients in a range of sectors, but particularly I lead the Housing Association department and I also work in the specialist team for the not-for-profit sector, so charities, academies and the likes. A bit about Mitchell Charlesworth. So Mitchell Charlesworth, we have 4 offices across the Northwest. And I think one thing that really we do try to achieve is being more than just your accountants. You know, we're very keen to build relationships with our clients and be part of the team, both strategically and in offering advice. We do particularly work with not-for-profit entities led by Phil Griffiths, one of our audit partners, and again, throughout a range of sectors. So what are we going to cover today on my section of the webinar? We're going to look at what good financial governance looks like. We're going to look at how board responsibilities transfer from the items that Alison has discussed through to the finances and the financial statements of the entity. And we're going to look at protection of charity assets, understanding the entity's financial position and what as a trustee you need to be able to know and understand, maintaining accurate financial records, looking at whether you are privy to independent examination or an audit and what that means, and then touch upon some of the financial reporting responsibilities, including going concern and the trustees report content. Okay, so we're going to start by looking at what good financial governance looks like. And I got this quote at the beginning of this slide from the Charity Governance Code. I thought it really did pull together, you know, what the common aim is. In being good governance enables and supports the charity's compliance with relevant legislation and regulation. It also promotes attitudes and a culture where everything works towards the charity's vision. I thought that was really made it quite clear that it is very much focused on what the charity's vision is, the objectives and aims of the charity, as Alison has already touched upon. So what do we mean by governance in a trustee's role? Well, it's the long-term direction of the charity, looking at the objectives and purpose, implementing policies and activities in order to meet those objectives, and quite obviously complying with legal and regulatory requirements and taking accountability for those with an interest or a stake in the entity. Good governance should happen throughout a charity, right from the top to the bottom, and the trustee board is responsible for implementing that. But to achieve it, I think you do need many more stakeholders to be able to govern well, whether that be your professional advisors, senior management team, staff, volunteers. But looking at what good governance means from a trustee board, I think it's really important that there are clear roles determined within the skill set of the board to be able to drive that board forward. Effective meetings. So here we're looking at meetings that are held with a clear agenda, clear action points, and a clear plan to implement those action points. And quite closely linked to that is going to be looking at the annual strategy of the board and in the entity. I think here we're looking at the viability plan, the budgets, how the next year, maybe possibly further than a year. I know quite a lot of larger charities look at a 3 to 5 year plan and ways in which that's going to be achieved. I think certainly for larger charities, it's also looking at the use of subcommittees, whether that be finance, risk and audit, to help centre the skill base of the board and the key risks that the entity faces. I'm not going to touch upon the next few too much at the moment because we are going to look at that in a bit more detail around financial planning, financial controls and financial reporting. But I do think that the final point on this slide is quite important, and that's oversight of directors and where the delegation of day-to-day responsibility lies. And I think it's clear to distinguish that governing is certainly around agreeing the purpose of the charity or not-profit entity, agreeing board strategies, how you're going to achieve the purpose of the charity effectively, accounting for the performance of the entity, and ensuring it operates within the law. Management, on the other hand, is about how we implement this, how the implementation of the strategies agreed and decided at board level actually come into operations. And that's detailed planning, putting procedures into place, and ultimately raising money, which is the key object to be able to deliver on the charity's objectives. So if we have a look now at the trustees' responsibilities in relation to finances, the responsibilities lie to prepare the accounts, and that may be something that's quite out of the scope of some of the skill set for a lot of trustees. Not everyone has the financial background and acumen to be able to deliver on that, but they do need to be able to prepare accounts that give a true and fair view. They need to be able to govern the keeping of proper accounting records, safeguard the assets of the charity. I think by assets of the charity, it's not just the cash, it's also the assets from a fixed asset point of view. It's stock if you are holding stock for your charity. It's investment portfolios if you've taken an investment policy. And also taking reasonable steps for the prevention and detection of fraud and other irregularities. Now, this point is probably the most ambiguous point, and I think given the diverse range of charities and not-for-profit entities, it's very hard to establish how you are going to prevent and detect fraud, because ultimately, no matter what the control environment, if someone wants to commit a fraud, they're going to do everything to override that system. So it's really important that this is all about oversight, and we'll touch upon financial controls in a couple of slides. So we'll start by looking at the protection of the charity's assets. If we can, so the first element is certainly around cash management, looking after the assets, and I think that starts with having oversight of what the charity actually owns and has. It's also about financial planning, and I think the financial planning aspect is really key in both the safeguarding of assets and implementation of strategy for the board. There's two elements to financial planning that I want to touch upon, and the first one is looking at returns on investments and policy for utilisation of reserves. I think from a utilisation of reserves point of view, it's really important to set a reserves policy as part of your board strategic planning. Now, no two charities or not-for-profit entities are going to have the same reserves policy. It is by far the most common question I'm asked when I'm attending board meetings to give advice around what we would recommend a good reserves policy to look at. And I think the answer is always, there is no one size fits all. The reserves of the charity are very much based on what the objectives are, what the aims are, and how you are going to deliver that. Some entities may base it on a expenditure perspective, so looking at expenditure over a 3, 6, 12-month period and setting aside sufficient funds that it could operate effectively without any income for that period. Others may look more strategically at certain projects they want to implement in order to deliver the charity aims. The second aspect of financial planning is around budget setting and making sure that there is a robust budget in place at the beginning of each period, and most importantly that is monitored against on a regular basis for the actuals in order to make those strategic decisions. As I touched upon in relation to fraud, the financial controls are really important to have in place. Now, the actual implementation and delivery of that control environment is very much going to be down to management, but it's important for board members to have oversight of what the financial controls are, especially around authorization processes, and approvals. Now, different nature of operations, different sizes, it means that not every charity or not-for-profit entity is going to have the same level of control environment. And I think the key is here is understanding where your risks lie and almost asking, well, if we were going to try to, commit a fraud, where are the weaknesses? Where would we do it? And addressing those points. And it may just be a one-page document for key financial processes or a full financial handbook for the larger entities. The Charities Commission does have quite good guidance on internal financial controls, which is a really useful document to refer to if it's an area that you think needs to be enhanced. So next we're going to have a look at how to understand the financial position of an entity. And again, this goes to show that not all board members are going to have the same level of understanding on financial matters or the same level of experience when interpreting financial statements. Now, financial statements are very detailed. Some can be up to 30, 40 pages long. So it's understanding which are the key statements to look at and what they tell us. So we'll start by having a look at the Statement of Financial Activities, or commonly referred to as the SOFA. This details our total incoming resources for the year and our total expenditure against those that income. Now, it is split by restricted and unrestricted funds. Most of you will be aware of the differentiation between unrestricted and restricted. Essentially, unrestricted funds are cash or assets that a charity generates to spend on ultimately whatever it wants, whereas restricted funds are quite simply funds with strings attached. There are restrictions either by the donor or the grant provider that need to be used for specific purposes. The balance sheet, which is the next primary statement, details the balance of those funds and how they are represented at the snapshot point in time by the assets and the liabilities of the entity. So that'll be the assets held, as I've already alluded to, whether that be fixed assets, stock, amounts due from providers, amounts due from operations, and cash at the bank, less any outgoing expenses that are due, whether that be to suppliers or deferred into future periods. It's the net position that's really important, and we'll come to look at the position on the balance sheet from a going concern point of view in a couple of slides. The cash flow statement is also key. This reconciles the total cash from one year to the next by looking at where it's been generated from and where it has been spent. So a really useful tool to look at where the cash is being derived from. Okay, if we go to the next slide, record keeping. Now this is one of the core responsibilities of the trustees in order to keep accounting records, and they need to be sufficiently detailed to both show and also explain the transactions of the charity. In particular, as we've highlighted here, they must be able to show the money that's come in, the money that's gone out by a transaction basis. Linked to that, and the whole concept of double entry, is that all of the transactions that occur will result in there being an asset or a liability in the entity. And it's then pulling that together to look at the financial position of the charity. It's important to note that records do need to be kept for a minimum of 6 years. Now that's the Companies Act guidance, but charity trustees need to be aware that the length of time may be longer if there's particular funding body agreements in place whereby they're for a longer period, or if they're governed by other legislation. A couple of other things to consider when keeping records. The first one is the value of donated goods and services. While there'll be no transactional value attached to this, it does need to be represented in the year-end financial statements. So keeping a record of any donated goods and services just means that that can all be pulled into the accounts. Gift aid records, really important to maximise your position and make sure you're claiming the amount that you are entitled to from HMRC. And finally, I'm not going to labour on this point too much because I think a lot of charities have now dealt with it. But deed of covenants, if you do have a trading subsidiary and are looking to gift aid the profits from that trading subsidiary up to the parent charity, there needs to be now a deed of covenant in place if the cash is not in line with the amount that wants to be gifted. So now for the fun stuff, whether you need an independent examination or an audit. I think from an independent examination point of view, the criteria is income of over £25,000. If you have income of over £250,000, you do need a qualified accountant to perform that independent examination. Once your income exceeds £1 million, and it's slightly disaligned with companies' thresholds for audit, but income over £1 million does give rise to audit requirements. But what are the key differences here? Other than the amount of work involved, which is far less for an independent examination than an audit, it's primarily the content of the audit report. So both an audit and independent examination ultimately are an external review of the charity's accounts and records, but the content of the report from the reporting accountant is slightly different for an audit, and it focuses on the concept of true and fair and giving an opinion around the appropriateness of that true and fair assertion. So what does true and fair mean? It means that the figures are accurate, they can be easily established. They make judgments and estimates that have been tested as being reasonable and prudent. They follow the relevant law and UK accounting standards. They've selected accounting policies that are appropriate and then applied them consistently. And the accounts have been prepared on a going concern basis. Now, trustees should not approve the accounts if they do not believe them to be true and fair. Okay, so looking at the financial reporting requirements of the trustees, you are responsible for the preparation of the financial statements, the presentation of the financial statements, which is dictated by the charities SORP. They are to be prepared on the accruals basis of accounting, which essentially means income and expenditure are matched to the period in which they relate. There are some specific reporting requirements for housing associations and charities and academies particularly. And we're going to look in a bit more detail at going concern and trustees reporting next. So from a financial statements point of view, it's really important that the trustees are aware of their responsibilities. Essentially, every page of the financial statements, excluding the independent examiner report or audit report, are the responsibility of the trustees. Similarly, as advisors, the only page we have direct control over is the content of our report. Accounting policies should be reviewed annually, and there are quite in-depth accounting policies for charities, particularly around fund accounting and income recognition. But I think practically, certainly for the clients we work with, we do assist with the preparation of the financial statements separately from the audit and independent examination side of things to ensure that they are correctly disclosing everything they should disclose and that they comply with these legal and accounting standard requirements. Okay, so if we touch upon going concern, because I think this is again another area we get asked quite a lot when attending board meetings, it is the responsibility of the trustees to determine whether the going concern position is appropriate. In order to do so, it's looking at the viability of the entity for a period of not less than 12 months following the date of the sign-off of the financial statements. Essentially, going concern is making sure the charity can meet all of its obligations, all of its liabilities for that period. So things to consider would be the availability of cash, the net current position, levels of reserves, particularly around those unrestricted reserves that have no conditions attached to them. Noting that actually if you have cash at the bank, but that is primarily for restricted purposes, then use of those funds would be regarded a breach of trust. So an important thing to note there. What's happened in the past? What are the past results? What do the budgets look like for the future based on those past results? And what are the strategies in place by the board to ensure that there is a viable entity going forward? Even if one condition does exist that may give some doubt around going concern, it doesn't mean that we necessarily have to qualify the accounts immediately. There can be considerations around disclosures to give some weighting towards why those conditions exist and what is being done to rectify the situation. And then finally, just to note on going concern, the impact on the audit report. Essentially, our audit report conclusion is to determine that we think the trustees have made the right assessment around going concern, and our audit report demonstrates that. So if there are indicators and we don't feel like the trustees have dealt with it or disclosed sufficiently, it may be that we have to add some additional disclosure to our audit report. I'm conscious that we are fast running out of time, so I'm just going to cover the next two slides fairly quickly. Trustees report content. Essentially, this is your report, and again, when I'm speaking to trustees or board members, the one thing I do emphasize about this is it's your report, it's your opportunity to celebrate your successes, to give some weight behind things that may not quite have gone to plan and put some context around some of the figures in the financial statements. As well as that, it should be telling the outside world and stakeholders and potential users of the accounts about the charity's work, where the money has come from, how you've spent your money, albeit there are some prescribed headings that need to be included within there, which are listed on there. We work closely with our trustees to ensure that they are fully compliant and have covered all the bases. But I do think it's a really good opportunity to really get across what the aims, objectives of the charity are and how you are meeting them and benefiting the public. So in summary, that was a bit of a whirlwind tour around board responsibilities and duties. There are an awful lot of legal, regulatory, financial considerations that you are committing to by being a board member. And it's really important that the effectiveness of trustees and boards are measured, whether that be skills audits and training for trustees and making sure that they're aware of their responsibilities. But it's not just down to the board, and I think it's really important that senior management teams, CEOs, directors, help with the delivery, the implementation of the strategic plan and manage the day-to-day operations so that the governance is the oversight rather than the actual involvement in those areas. And ultimately, other stakeholders, accountants, legal teams, HR advisors are really key in helping to deliver both the responsibilities and also ensuring that everything is done in a regulatory way. And that all responsibilities are and reporting to third parties is done so clearly. Now, I know that we were going to try and answer some questions. I'm just going to have a look to see if there are actually any waiting. There's just one, and that's, I'm going to keep it confidential. The one that's been asked is, from a board point of view, how often would you expect to see financial information? And a very quick answer to that would be each entity probably has a slightly different reporting, but I would certainly say monthly or quarterly, the board should be kept informed of, you know, where the charity is from an income expenditure point of view, how the funds are being used, and that balance sheet position. Unfortunately, if there are any other questions, we will have to email back or give a call. So if there are any emails, please feel free to use the chat function now, or alternatively, both mine and Alison's emails are on the screen. As I said, the webinar has been recorded, so we'll go live on both of our websites if there's anything you want to pick back up on. And thank you all for watching.